Good morning, everyone, and thanks for having me here today. So I'm Larry Diamond, founder and CEO of Zip Money. We're listed on the ASX, and we're also in the world of Fintech. So people have been talking about, when is the Amazon moment going to be coming to banking? And I think if we look at what's happened in America in the world of retail, and we look at sort of the parallels between Walmart and Amazon, there's some really interesting case studies. So Walmart started in the early 1960s. They have about 12,000 physical stores. And their business has really been built up through physical presence and physical distribution. Amazon started in the late 90s and doesn't have a single store. If you look at the two companies today, Amazon is about 400 billion and Walmart is about 200 billion. I think Amazon accounted for about 50% of all online sales prior to Christmas, and Walmart was about 3%. So it just shows you the power of disruption, the power of digital personalization, convenience, and giving consumers a better way to do things. And so we are very excited, looking at what's going to happen in the world of banking and who's going to be the Amazon for the world of banking. And this disruption in fintech is actually really real. I mean, this here is the homepage of one of the American banks, and you can see thousands of startups that are basically picking off all the different banking services. Everything from checks, deposits and savings to credit cards, personal loans, mortgages, etc. And they're all having a go. No one's doing it all yet, but they're all having a go, and they're having a go at trying to deliver a better service and better terms for consumers. For us, we're having a go too. The first model that we've looked at is the credit card model. And we genuinely believe the credit card model is absolutely broken. If you look over here, some of the data that we have, you can see cash is declining, credit volume is actually flat, and we're seeing the emergence of digital wallets and also debit card growth as well. And the reason being, if you look at credit cards, did you know that of the $60 billion of credit card volume in Australia, 2/3 is actually interest-bearing? And you probably miss it, but banks automatically put you on the minimum contractual repayment, and it's why it takes consumers anywhere from 20 to 50 years to kind of pay back. And this model is only getting worse and worse. We've seen interchange caps, we've seen the cost of loyalty programs getting even more. So consumers are looking for a better deal, a better way to pay. They're looking for consistency in the way that they pay online and also in store. There's lots of new players that have popped up. In China, for example, 88% of all mobile payments is now being handled by the WeChat Pays and Alipays of the world. Guys like Apple Pay and Android Pay are trying to create that seamless single experience, whether you're online and in store. And here at Zip, we're doing the same. So a little bit about Zip Money. We're starting off with simplifying how you pay everywhere and save every day, and a very strong focus on transparent, responsible financial services. So we've tackled the credit card on the left, and we've tackled sort of savings and deposits and money management on the right. So we've started off, Zip is a next generation payment option at checkout. We see ourselves sitting alongside, Visa, MasterCard and PayPal, but offering a very different value proposition. And that is, purchasing power and payment flexibility. And we can instantly provision, a digital credit card, if you like, at the checkout. What that does, it gives consumers interest-free terms, flexibility. It gives merchants and retailers a great way to acquire that next generation millennial, to convert that browser to a paid customer, and the results have been pretty strong. We are regulated, so we have an Australian credit license, we have an Australian financial services license, and if you look at the way that we've designed the Zip credit account, it's really to go up against what we've seen in kind of credit cards. So our minimum repayment is multiples of what you'll see in kind of credit cards. Zip Pay, we give you a digital wallet up to $1,000 with a couple of clicks. We actually removed the concept of interest entirely because we thought that made sense. As you get to Zip Money, $1,000 to sort of $10,000, a very strong focus on interest-free. And if you look at the Zip Money portfolio, for example, 85% of that is actually interest-free, and you contrast that with credit cards, which are about 30%. And we also make close to 0% from late fees. So we want to build a financial partnership with our consumers, and that's what we're doing with the Zip product suite. Pocketbook is another great business. We actually acquired it last year in August. It's a free money management app. It's been in the top 20 apps in the App Store for the last few years, and it's all about managing your spending. They've signed up close to 300,000 Aussies. For us, we look at the world of payments, and we have only just begun. I mean, these numbers here is really the size of the prize. $300 billion is spent in retail in Australia, a large chunk of that in the grocery channel, and there's $500 billion in credit, in payments, either debit or kind of credit cards. So we've only just started. We see ourselves as a technology-driven financial services company. We've got about 3,000 retailers now, over 200,000 customers, and we've processed over 150 million on our payments platform. And as you can see, we listed on the stock market in 2015. We are really only at the beginning of this journey. And I think these numbers show, we still see ourselves as a startup, and it just shows the real strong product market fit and the opportunity for us and other players in the market. Now, we were touching on earlier around why do buy now, pay later payment solutions, why they're so exciting and interesting for retailers. When we started 3 years ago, companies like Flexi Group and GE, had been really successful. And they'd focused on a very small area of retail spending. We're really going after everywhere a consumer is spending. But the KPIs that retailers look for when they're looking for another payments partnership is around, conversion. How do we convert that browser into a paid customer by giving them some strong value proposition? How can we lift our basket size? How can we get customers coming back and retransacting? So by offering transparent, responsible payment flexibility at the checkout, you see some crazy numbers. And it's why businesses like us have resonated so well with retailers in Australia and around the world. If you look at models like Klarna and PayPal Credit, share of checkout anywhere from sort of 10 to sort of 30%. Average order values, significantly higher than other forms of payment tender. And most importantly, because it's a digital wallet, consumers are actually coming back and retransacting. And so, we've put up there a quote from YouFoods. Zip's going after large retail, but we're also going after small business. And there are 2 million small businesses in Australia. YouFoods is one of our food services that has seen tremendous success from offering products like this. Now, underpinning what we do is something interesting. I just want to touch on it for a couple of minutes. And it's around our proprietary fraud and credit decision technology. So in the old days, you used to go into a bank, you'd fill in a credit card application, about 60 fields. You might get a decision there at the end of the day or probably a bit later. So we have, since we started about 3 years ago, I remember going online in America and signing up to PayPal Credit, and you put in a social security number, date of birth, and you got this instant decision. So when we started the business, we tried to think about how can we deliver that seamless user experience, but still satisfying the responsible lending requirements and also managing our risk. So we brought a couple engineers out of Commonwealth Bank, and we've worked on this proprietary engine. And just like Scott said, he's a hoarder of data. We are also a big hoarder of data. And we've built a decision engine that looks at conventional credit data, but also non-conventional credit data. So, when we talk about conventional credit data, we talk about ID, we talk about credit bureau information, but we also look at a lot of non-conventional data. Things like social, do Collingwood supporters pay back better than Swan supporters? We look at behavioural dynamics. We look at banking transactional data. And we do all of this in real time. So in a way, we're actually doing a lot more diligence on these consumers in a much shorter period of time. We've got a full data science team behind this business. And what it's allowed us to do is actually deliver loss rates that are industry leading. We're continuing to kind of work on this and add more and more data pieces into it. But it's a huge point of differentiation. It's what allows us to onboard consumers in real time and really manage our risk. The other business, or the other part of our business, is about simplifying how you save. So Pocketbook, I don't know if any of you have got a Pocketbook account, but it's a great app. It's free. You download the app, you synchronize all of your bank accounts. It then categorizes all your spending. It allows you to track spending behaviors, manage your bills, and also budget. They've done an amazing job, Alvin and Bosco. They've joined our team, and they actually used to be in Stone and Chalk. They've now moved to offices and working unbelievably well together. They have the same mantra and ethos around helping consumers achieve financial freedom. Last year they were voted, #1 by the industry and the people, and I think in January they had their biggest month ever. Now, when we talk about PFM or personal financial management, these guys are really spearheading PFM in Australia. They've done a great job so far, but it's super exciting to where they go. We were talking to them just the other day. If you can own the consumer relationship, if you can be, if you like, the router for all of their decisions around purchasing financial services and products, you can extend to even other non-financial products and services. So what we think is really exciting and what these guys are working on is things what we talk about here: automation, optimization, and interconnectedness. Automation. Wouldn't it be great if all the excess cash that's coming into my bank account throughout the month was being funneled into a high-yielding account, and I didn't have to do anything? Wouldn't it be great if my payments could be smooth so I'm not charged 20% interest while I'm not being hit with, overdraft fees and kind of late fees? Wouldn't it be great if I could top up mobile and utilities all from inside the phone? This is where these guys are going. They've got a great platform. It's only going to get better, and is really a core part of the Zip Money business. So what does the future hold for us? Our vision is to see Zip at the checkout everywhere you shop. We have 3,000 checkout points now. We want to get to 200,000. We want a digital wallet that's seamless when you shop online and shop in store. And we want to build a financial partnership with you over time, so we become trusted and we become your kind of go-to. The pocketbook experience is about owning that relationship. You'll see in the next probably 12 to 24 months, those parts of the business come together, but we're running them very much in two separate streams at the moment. At the end of the day, we really see an opportunity in Australia to build a financial services brand that's really focused on financial well-being, being trusted, being simple to understand, simple fee constructs, and simple, a very simple and easy, digitally savvy experience. So that's where we're going. I hope you've enjoyed my time here. Have a great day.